All right. Hey, everybody. Thank you for joining me. I'm Novi Fibonacci, and today I want to go ahead and talk to you about one of my favorite Easter eggs of strategies in trading, the divergence. Now, the divergence is a pretty common reversal strategy in trading because it's heavily dependent upon the relationship and reaction between price and an indicator. Now, even though it may be simple to spot a divergence, it's not all that easy to trade. So today I want to go over what a divergence is, how to spot one, and how to trade one. So to start, what is a divergence? Now, a divergence is to move, lie, or extend in different directions from a common point, or to deviate from a prescribed course. Now, an analogy, maybe something to help relate. Now, let's say we have a river. Something comes down that river, hits the side, and makes an indent. Now, over time, water rushing into that indent will turn into a creek, and then that creek will turn into a whole new river. Now, that would be a divergence from the main course, the main river. Now, in trading, divergence is when price is moving in the opposite direction based off of what a technical indicator is showing, some sort of momentum indicator. Now, before we go and look at some examples and show how to spot one, I want to go over a couple of key things that I look for that will tell me that I truly am looking at a divergence. So one, I want to see price coming into an area of value, be it a resistance zone or support zone. Two, I want to see some sort of break of structure. For example, one, we have a lower low going into a higher high. For example, two, we have a higher high going into a lower low. And then three, I want to see some sort of change in momentum. Now, in example one, this is going to be a higher low. And then for example two, this is going to be a lower high. Now let's go ahead and hop over to example one. Here I have USDJPY on the 4-hour chart. Here you can see that price is giving us lower lows. Now if we take our tool, mark these lows here. Now we have the one half of the strategy. We have price, right? Now we need the other half. We need the indicator, some sort of momentum indicator. Now you can use a stochastic or change of momentum, but I personally like to use the RSI, the relative strength index. Now let's go ahead and look at how to apply that to the chart quick. If you go up to indicators in your search bar, go ahead and just type RSI. You'll see it pops up relative strength index. We'll click that and let's edit this real quick. I always get rid of the RSI based moving average, and I like to make the line a little bit more visible to me, so I make it yellow. Now here we go. We have the relative strength index popping up underneath our chart here. Now you can see that are lower lows that price is giving us on the chart. Now if we look down and match those with the lows on the RSI, we in fact are seeing higher lows. So that right there indicates that there is some sort of change or reversal imminent, something coming up, right? So to be sure that this may truly be a divergence, I want to know, one, is this in an area of value? Now, if you scroll to the left, look to the past, you can see here UJ, USDJPY, gave us a double bottom pattern back in July of 2023. And with the confirmation and test that was successful, we have price working up. Now, what's created from that pattern is this support zone here. Now, if we stretch this support zone and go across, we in fact see that price did interact with it. And it is, in fact, where this divergence is happening. Now, one, there's our area of value. Two, I want to see some sort of break of structure. So we have our lower low. And in fact, we have price working up into the support area and using it to give us a higher high based off of our previous high. Okay. Now, 2, there's our break of structure. 3, I want to be sure that there is change of momentum. Now, this change of momentum comes in 2 ways, actually. 1, I like to use a tool called the Fibonacci retracement tool. Go from the lowest low to the higher high, and here you can see price did in fact retrace to the golden Fibonacci zone. Now, there is the change of momentum. Price no longer wants to come back down. Now, how can we also be sure that this move down truly is the bulls stepping in and taking charge? Well, you can see that shortly after our divergence is created on the RSI, you have price going from underneath the 50 to working up above the 50. Sorry, that circle's a little obnoxious, isn't it? So after price ends up moving above the 50 on the RSI, along with price giving us that break of structure, we can now confidently see that, yes, in fact, we do get that retracement and prices up above the 50 in our RSI. This looks like the bulls are definitely in charge. So let's go ahead. There is our bullish divergence example. Let's move over to our bearish divergence example. This comes to us from the USD against the Canadian dollar. Now, here we have UCAD on the hourly chart. You can see 1, we have our highs here. But if you look on our RSI, our higher highs are in fact lower highs. So this could possibly be a divergence. How can we be sure? 1, area of value. Let's look to the past. In fact, price back in October and November of 2023 gave us this double top. Now, if we take this resistance zone that was created from this double top, we can see, in fact, price does come in contact, stretches right up into it. So 1, there's our area of value. 2, we're looking for a break of structure. So going from higher high, we can see that price gives us a lower low, based off of our previous low. Okay. Now, 2, there's our break of structure. 3, the change of momentum. Now, if we take our Fibonacci tool, go from the highest high to the lowest low, we in fact see that we have a deeper pullback into the 38.2 level. But in fact, it is a retracement, a successful retracement, and price begins to work its way down. This right here is our lower high. Now, also along with the break of structure, as an added bonus confirmation, we see price after the divergence in the above 50 sector on the RSI. We see price giving us, along with the break of structure, working down below the 50 on the RSI. giving us added confirmation and confidence that price is working down, or rather wants to. Yes. Yep. Our higher low. So that is how I choose to spot the divergence. These are the confirmations that I look for. Real quick, I want to go over a more current pair that is giving us, or did give us, a divergence. Let's go ahead and reset our chart. Now I have EU, euro against the US dollar. Now if we pop up our RSI here we go. We see price, of course, on our RSI giving us lower highs, but we're seeing higher highs on price in the chart. Already you see price has worked into this area of resistance. There is our area of value. 2, our break of structure actually came at the beginning of the week. So this actually is, this confirmation comes to us as a chart pattern. Be it the head and shoulders. So again, we have our area of value. 2, we get our break of structure. And then as the added confirmation, we also get price working down below the 50. And that's it. That's the strategy can be sort of tricky to kind of to understand, but over time with practice it does make sense. It can be a very, very valuable tool to have in your arsenal when you trade. A couple of tips before I end the video. Always remember that you need confirmation with this sort of strategy. It can be very easy to believe that you are seeing it can be easy to believe that you are seeing a divergence when price really is just acting choppy or doing something suspicious. So the more reliable the divergence looks, the better. And so a reliable divergence, usually when you have your highs or lows, those dips or rises in between should take a day or two, maybe a couple of days. And then not only that, but you always want to make sure that price is working in an area of value. Very important. So I hope you enjoyed my my explanations here. Hopefully it was easy to understand. This is divergence, RSI versus price. Again, you can use other momentum indicators along with price. I personally just prefer the RSI. Thank you for watching. For all things currency, keep it current with Noe Fibonacci.